Hello everyone, in this video today we're going to be going through research and development costs and then some other miscellaneous costs. So this is mainly like R&D costs, and then we just have a few other things we have to go through very quickly. But yeah, our focus is generally on R&D from this specific section. These other ones are kind of just included for completeness purposes, and they could show up on a quiz or an exam, but we're kind of just going through everything just to make sure we've covered all our bases. Okay. R&D costs incurred to improve a company's operations. They must be aimed at discovering new information or applying that information. So basically, this is just a definition that to be an R&D cost within GAAP, it has to meet this definition. Okay. Generally, these costs are expenses incurred, such as an example would be a company pays an R&D employees. Okay. However, if the costs incurred have an alternative future use, the costs are capitalized and then expensed over time as research and development expense. Okay, so what you do is that you capitalize it and then you expense it over time. Okay, so for example, a company purchases a piece of equipment that will be used for the next 5 years in R&D. In that case, what happens is that you will capitalize the equipment and then you would depreciate it over time using R&D expense, okay, as the actual debit for the expense instead of depreciation expense. In that specific example, you would actually have R&D expense, okay? Then we have startup costs, includes all costs to start up a business, includes items such as training employees, travel-related costs, costs to set up a distribution network, legal and state fees to organize a new business entity, and then opening a new plant. These costs are just expenses incurred. Then we have initial operating losses. These are losses incurred in the early stages of a business's life. Companies may not capitalize initial operating costs. Okay, so these are just going to be shown in the income statement as an operating loss. Okay, advertising costs, generally these are expenses incurred as well. And then computer software costs, if these costs are used for selling and administrative activities, they're expenses incurred. Okay, so some of these, they're very quick coverage. That's pretty much all you would need to know is what is shown in this packet. Okay, then we have R&D costs. We have a quick practice problem. Okay, and this is a relatively comprehensive one that has a lot of different things in here, so we can see kind of, most of what we would need to know. It's pretty comprehensive, okay? XYZ company is a drug manufacturing company and spends a substantial amount on research and development expense. The following information is available for XYZ for the year ended December 31 of 2017. Then we're given a bunch of items and a bunch of amounts, okay? Additionally, assume that the equipment in the building, it's telling us more information about what we had here. We're both purchased on January 1 of 2017, and we're depreciated using a straight line method with no residual value. Okay. Required, determine the proper accounting treatment for the above items. Additionally, determine the amount of R&D expense that XYZ will record in 2017. Okay, so the first thing we need to do is we need to determine, okay, for each one of these items, basically, what's the proper accounting treatment, right? Because we can't figure out what is R&D expense until we determine the proper accounting treatment, right? So first, materials used in 2017. For R&D, well, that's going to be R&D expense, right? Because they're all used in 2017 for research and development. That's relatively straightforward. Equipment purchased that will only be used in 2017, okay? So this is just equipment that is purchased. It is used only for R&D, okay? It doesn't explicitly state that, but because of the fact that it doesn't give us any other information there, we can kind of just assume, okay, they're a drug manufacturing company. They're doing R&D activities. It's probably used for R&D. Okay, so that is only used in 2017, which means the entire amount is going to be just expensed in 2017 because we're just using that equipment for 1 year. Okay, then we have cost to advertise XYZ's new R&D projects. That would be a selling expense, right? Because that's basically like advertising, marketing, something like that. Okay, that's like goes under selling expenses on the income statement, not an R&D expense. Then a building purchased for R&D that will be used for 10 years for $500,000. That we would capitalize and depreciate, right? We're going to depreciate it as R&D expense, right? So we'll have a little bit of R&D expense in the current year, but then we'll capitalize the rest of the asset, right? The rest of the asset will not be expensed in the current year, okay? So then we'll have materials purchased for future R&D projects. These would be capitalized as inventory, right? Because again, we haven't used them yet. Yes, we did purchase them, but we didn't use them yet. And so we capitalize those, right? Because again, it has an alternative future use. Okay, this is kind of what we're looking at is if it's used for just this year, we expense it this current year. If it has an alternative future use, we capitalize it and then we expense it over time. Okay, so that's basically the delineation. right? So for something like materials used in 2017, well, it has no alternative future use. We used it this year, no future use. Same thing with the equipment, right? No future use. However, the building has a future use. The materials purchased for next year have a future use. So we'll capitalize those, okay? CEO salary has really nothing to do with R&D. It's just an administrative expense. Operating loss 2017, that's just showing the income statement as an operating loss. There's no specific way to classify that. It's just that it would not be capitalized. That's the main thing we want to note here. As we noted on the first page, it's not capitalized. It's just shown on the income statement, okay? Salaries of sales personnel, that would be a selling expense, right? Relatively straightforward. And then salaries of R&D employees, that would be an R&D expense, right? Because again, that would be something that we would pay out during the current year. There's no alternative future use for salaries that we paid out during the current year, okay? Then we need to determine our R&D expense for 2017. Relatively straightforward now that we've determined what is an R&D expense. So materials used and then equipment purchased were both R&D expenses. Those were 40 and 20 from the top two. Okay. Then we had the building purchase for R&D that will be used for 10 years. Okay, that was our next R&D expense right here. Okay, capitalized and depreciate as R&D expense. It's going to be $50,000. How do we get that? Well, we take the $500,000 that we bought it for. We have zero residual value. It tells us that right here in the facts. It says we're going to use it for 10 years, so we're going to straight line it for 10 years. It tells us that we're depreciating straight line. Okay, so we do 500,000 minus 0 divided by 10 gives us $50,000 per year. Okay, $50,000 per year of R&D expense. Then the salaries of the R&D employees were 75. That was our next item. And then if we go ahead and we add those all up, then we will end up with not 635,000. That's a typo, but we will end up with 60 plus 50 plus 75, so $185,000. Okay, so just add these up. I think I must have thought this was 500,000 for some reason, but it's $185,000. Okay, that we will end up with there. Okay, so that's the end of the first problem. Basically, what we did was we just determined what's the proper accounting treatment. Is it an R&D expense? Is it something else? And then from there, we actually go ahead and we determine, okay, if it's an R&D expense, that means that we need to just determine the amount that we're actually going to put into the expense account, right? So again, that would be $185,000 as a total for R&D expense in 2017. Okay, so that is the end of the first problem. Then we just have a quick problem for startup costs, okay? So basically, we have this company, ABC Company. They began operations on January 1 of 2017. The company incurred the following expenses during the year ended December 31 of 2017. Okay. Then we have a bunch of items and we have a bunch of amounts. Okay. So first, we have the cost of opening a store. Then we have the state filing fees, cost to acquire patent, training employees, and then establishing a distribution network. Okay. Required, determine the proper accounting treatment for the above items. Additionally, determine the amount of startup costs ABC would record for 2017. Okay. So again, let's just have the first page next to this here so we can see everything at once. We want to just be looking right here so that way we can kind of figure out what is startup cost and what's not. So cost of opening a store, well, that's kind of like opening a new plant, right? And that's a startup cost because, again, like you're beginning your business, right? So that's definitely going to be expenses of startup cost, okay? So that would definitely be expenses of startup cost. Again, these are expenses incurred, right? That's the accounting treatment. So that's what we're going to do. State filing fees, okay, that's right here. Legal and state fees to organize a new business. That would be considered to be a startup cost, okay? Cost to acquire a patent, that would be capitalized into the patent account, right? That has nothing to do specifically with starting up our business. That's just a patent that we're acquiring for something that we've created, okay? So we've taken care of that one. Training employees, okay, yeah, that would definitely be a startup cost, right? We have that listed here on our list as well. This is not necessarily a comprehensive list. I'm just using it to compare and see if we have anything on here that would make sense over here. This is like a lot of them, but it's not necessarily every single one that you could ever see. But training employees, yeah, that's definitely a startup cost, right? Because you have to train your employees when you first begin your business, okay? And then establishing a distribution network, well, it says right here, startup costs. One of them is establishing a distribution network, which makes sense, right? Because if you're just starting up your business, you have to establish a distribution network. Okay, so that'd be $40,000. Okay, so then we just add up our startup costs. Every single one of these, except for the cost to acquire a patent, was a startup cost. That means we'd have $50,000 10,000, 75, and then 40,000. If you add those up, then you should end up with 175,000, and you do. So that would be the total startup cost for 2017. Okay, so that's basically the end of this lesson. Nothing too crazy here. Just basically for R&D, do we expense it, in the current year, or does it have an alternative future use in the case that we capitalize and then we expense it over time as an R&D expense? And then we have these startup costs, which we basically have to determine, okay, what is a startup cost, what is not a startup cost, and we also just want to make sure that we have these other things memorized just to make sure that we're fully aware of everything that could potentially be tested. But yeah, I mean, a lot of these problems, it's just useful to know, okay, if they give you a bunch of things, what's the accounting treatment? And then from there, let's actually solve the rest of the problem, right? Because a lot of times the problem might say, oh, well, they might give you something like the problem before like this, and they might give you a bunch of stuff and say, what's R&D expense? They just ask you what's R&D expense. They don't necessarily ask you the accounting treatment, because on an exam, it's kind of hard to ask, like, what is the accounting treatment, right? Especially in like a multiple choice. Like the only place they could do this is free response, which like this would be hard to ask in a free response without having like just a lot of variation in answers to the point where it'd be difficult to grade. So they might just ask you for R&D expense. You might just be tempted to, oh, okay, that's R&D expense, this is that, whatever. Going over the accounting treatment first to make sure that you're identifying the R&D expenses is probably a good idea. Okay, so that's the end of this video, and I hope that was helpful.